Afternoon, ladies and gentlemen. I'm here with Mike, the CEO of Vendetta Mining. You're getting pretty close, Mike, to the I guess the maiden economic study of your Pegmont project, which I've been following for a while. I mean, I've always maintained that because of your infrastructure advantages, among other things, I expect Pegmont to put up really good PEA numbers. I mean, obviously the PEA is not out yet, but is there anything that Mr. Williams can whisper to the camera that isn't going to get him in trouble? I mean, is there any?
Well, I plead the fifth. Yeah, look, I think it's fair to say the PEA is out next month. Yeah. Having said that, we wouldn't have gone to PEA as a standalone unless we were confident that it was going to be considered robust. Yeah. Now we'll know the viability shortly, but given the grade we have and the fact that 2/3 of the ore body is now in open pit shells, that really impacts the economics. The other thing we're finding out is it appears we don't need an above ground tailings dam, so that saves a significant amount of money on the capex. So one of the things, you've always maintained that you thought Vendetta would be able to capitalize on this zinc cycle. Right. And I think we will for a myriad of reasons, but one is we've got the infrastructure there. It grew up around mature infrastructure. So our cap costs will be reduced, which means we didn't have to take it we're currently sitting at around 14 million tons inferred and indicated. I could break it out for you, but that's enough. With 9 million, 9.5 in the open pits, okay. 4 in inferred and 5 in indicated. So, more than 50% of our open pit ore is now in the indicated category. That gives you your mine life. Right. But it will still expand as we do further drilling. But, I'd like to think we're there. I'll have a concrete answer for you in about 15 to 30 days.
Now you're doing a standalone PEA. That is, the PEA is being designed on the assumption that you'll be building the mill and everything. Now, of course, we both know there's a couple of mills not too far away, like Cannington, for instance, South 32. Could they use Pegmont? Is it?
Yes, yeah, absolutely. They were historically mining 3.2 million tons per annum on an average silver grade. It was originally a silver lead deposit. Their silver has been dropping. It's on a declining grade curve. So what they, and they've been very public in saying this, what they wanted to do was go from 3.2 million tons per annum to 4 million tons per annum. The problem they have is to do that, they have to open pit their ore body. They can't go underground because they're constrained by, I think it's the shafts. Right. So the only other alternative other than their own open pit really in the area is Pegmont. Now, they've sort of always maintained, in our informal talks with them, you guys need to be able to demonstrate at least 800,000 tons per annum. That's what we would look for. We just put out a new resource. We're there, and not only are we there, we're there on an open pit, right. which de-risks, in my mind, the project considerably. So, but since then, they've actually run into a few problems underground. They're not mining at 3.2 million tons. I believe they're down to 2.4. Okay. So if you look at it just analytically on paper, our ore is not as valuable as our underground ore, but it's more valuable than their open pit ore, which has a high strip ratio. Okay. But they can't increase their underground. So it makes sense unequivocally to blend for both parties. I think I think Cannington is a definite potential suitor. And then we've got the Chinese 25 kilometers equidistance the other direction.
Yeah, that mill, Osborne's done, right? I mean,
it's largely fallow. Yeah, they're just running some remnants through it. It's a private Chinese company, which makes it a little bit harder to deal with because you really don't know what's going on, other than to say they used to mine copper that was shipped to Mount Isa, right. 4 hours away by truck. So it doesn't have to go to mainland China. It's not a state-owned enterprise. Right. So they do have some flexibility. That's a 2 million ton per annum mill that they're kind of, I think, figuring out, okay, how do we keep it going?
Right.
And yeah, I think Pegmont could give them right now probably 10 years mine supply. And I don't think Pegmont's going to end up at 10 years.
Yeah.
The deposit's open, we'll keep drilling, and with a little luck, maybe you get 15, 20, 25 eventually. These ore bodies just don't, we're not, we went to the PEA sooner because we made a conscious effort 4 years ago to show the economics of it sooner than later,
Right.
to catch the zinc cycle, which I think we are.
Okay. Vendetta mining, PEA is coming soon. I'm very comfortable with my own back of the envelope that the IRR NPV is going to be a very large multiple of what the current market cap is. And it is one of those projects that has a pretty short timeline to development and some pretty obvious potential buyers if you decide not to build it yourself. It's a story I really think people should be paying attention to, and now. That's it.
Thanks, sir.
Okay.
Thank you.